Hello and welcome to Livewire Markets. My name is Anna Dadich. Today I'm speaking to Glen Finegan of Skerryvore Asset Management to unpack the dynamic landscape of emerging markets. Welcome, Glen.
Thank you.
So Skerryvore is a specialist emerging markets investor. Why have you chosen to dedicate yourself to this market?
Yeah, sure. Well, it's an interesting part of the world, the sort of developing part of the world. There's lots of companies to look at that are exposed to quite early stage opportunities. It might be mortgages in India or healthcare in underdeveloped parts of Africa, things like that. So lots of interesting longer term trends to look at. It covers the developing world. I mean, most of the people in the world live, I think 80+% of people living on planet Earth live in the emerging markets. But in terms of stock markets, they're still quite underrepresented globally. So that's an interesting place to see if you can find good long-term investments.
Mm-hmm. So can you set the scene for us and outline the key points of interest that are playing out across the emerging markets landscape today?
Sure, there's lots of different moving parts. Obviously, parts of Asia are very tech-centric, big parts of the supply chain into the AI boom, that's sort of playing out in parts of Asia. There's obviously very significant tech type investments taking place in China as well. But that's very, very popular at the moment, and a lot of those stocks have become really very, very expensive. But there's lots of other things to look at around emerging markets. Consumer behaviors are evolving. People are, as middle classes grow, people are adopting sort of products and services that we take for granted in the developed world. So there's lots of longer term interesting growing trends such as sort of wealth management in India or pharmacy chains that are expanding in China. And even at more earlier stages, you can find things like soft drink bottling operations in sub-Saharan Africa where consumption is very low. So lots of different things outside of just tech to look at.
Glen, how do you break down the broad EM universe into an investable opportunity set? And could you share a few examples of how you're positioned currently?
So the exciting thing about an emerging market investment is it's operating in very early stage of economic development. And that can create great long-term runways for growth. The issue with many emerging markets is you often have a challenge around rule of law. So the sort of protections that you might expect as a minority shareholder in a developed world listed company, they might not exist. If the chairman or the manager sort of ran away with the company's money, you mightn't necessarily be able to get it back under weak rule of law in emerging markets.
Does that happen often?
It happens around, not just in emerging markets, it happens in emerging markets more often than you might think, because governance is a bit of a challenge. So it's extremely important that you kind of go into the emerging markets opportunity with your eyes wide open. Governance mightn't protect you, and therefore you've got to protect yourself. So a key part of identifying a good quality emerging market investment opportunity is understanding who the people are behind it and how they've treated stakeholders in their business over long periods of time. Because ultimately you're trying to assess the integrity of those people to ensure that you won't be the victim of a governance failure. So a classic example, I think, in the last few years of this is, at Skerryvore, we never invested in Russian companies. So we traveled in Russia, we met lots of Russian management teams, and we never met any who we thought really cared about us as minority shareholders. Most of the businesses seem to be run as a sort of enrichment scheme for themselves. And certainly the idea of a foreign minority shareholder and us having a sort of equal share in the business as themselves just didn't seem to come across. So we couldn't find any governance models there that we thought would protect us. And therefore obviously didn't put any client money to work in that market. And when they sort of tragically invaded Ukraine, anyone who was overlooking the obvious governance risks in Russia lost all of their money. So it's very important to really, think about the level of alignment and the integrity of the people you're invested alongside, because the rules aren't necessarily going to protect you, so you have to protect yourself. So that's kind of a key part of what we do.
So it's a real bottom-up approach.
Very bottom-up, yeah, very much company by company.
Yeah, okay. So long-term thinking is a core part of your philosophy. Could you share an example of an investment where you've identified a compelling long-term opportunity?
Yeah, I mean, just to think of one I think is fairly obvious is Coca-Cola's partner in Eastern Europe and Africa. So it's a company called Coca-Cola Hellenic. It's a partnership between the Coca-Cola company in Atlanta and a family that are based in Greece. The history of the business is it sort of got going in West Africa and bottling Coca-Cola So it's a distribution and bottling business in West Africa. It's expanded now, and it covers all of Eastern Europe, and it covers large parts. It's got the Egyptian market, and it's also got the Nigerian market still. And just recently, they've announced that they're buying Coca-Cola Africa, which was a business based in South Africa that had places like Tanzania, Ethiopia. So really, this is now the bottling footprint of the Coca-Cola company, which isn't just Coca-Cola, it's juices, all sorts of soft drinks for the whole of Africa and Eastern Europe. And consumption per capita is very low, and the demographics are very, very, are supportive. The populations are growing, they're young populations. So it's probably a pretty good place to sell soft drinks. So that, to us, that's a kind of a very well-aligned governance structure. So we have the family and Coca-Cola owning the same shares that we do. And you have the company pursuing a long-term demographic-supported opportunity. And it should be able to grow for many, many years into the future. So those are the types of things we like to invest in.
Sustainability is also a core pillar of your philosophy. Could you share a story of what this looks like in the real world?
Investing in companies that are behaving sustainably is important, because if they're not sustainable, what are you doing investing in them? They'll probably be bad investments. It also speaks to the kind of rule of law challenge, in the sense that you're looking for evidence of integrity of management teams and owners. And of course, how they treat shareholders, or how they have treated shareholders, is important. But another window into the integrity of people is how they treat other stakeholders. Do they pay tax? Do they ignore modern slavery risks in their supply chain? Do they dump their toxic waste in rivers? Is it just some sort of environmental arbitrage? And businesses that behave in those ways, they're giving you a window into the integrity of the people calling the shots. So if you see examples of very poor behavior, you're better to stay far away from it, because you're minimizing risk in your portfolio by backing management teams and owners, who are more than likely going to do the right thing by all stakeholders. So we spend a lot of time talking to companies about their sort of non-financial performance, whether it's post-consumer waste for Coca-Cola bottling companies, for example, and recycling. We want to be invested in companies that are quite forward-thinking, that understand that this is a risk to their business. In a Coke case, it's water consumption is important, how they treat the waste, the post-consumer waste. These are risks to the business that coming down the pipe, and you want to know that the management team are forward-thinking enough to be ahead of this. So it's an important way of assessing whether or not you're buying good governance models, looking at how they behave in the areas of environmental and social. We spend a lot of time, we talk to not just companies, we also talk to groups like NGOs and charities that highlight poor corporate behavior in emerging markets. So there's lots of different ways to get information on this, not just talking to the companies.
And people talk.
And people talk.
So Skerryvore is Scotland's tallest lighthouse. I did a bit of research on what the name meant. And your philosophy often references navigation and having principles that keep you off the rocks. What do you think are the best ways to keep off the rocks in emerging markets?
Yeah, so the Skerryvore lighthouse is just off an island called Tiree. It's a pretty stormy part of the British Isles, and it would be really quite treacherous if they hadn't managed to create a sort of structure that stood the test of time on it. So it's a nice image, because yes, it talks to sort of navigating safely in what can sometimes be choppy waters, and steering clear of rocks and things like that. So, and it's very rewarding when you do it safely. So that's kind of where we got to, sort of in terms of thinking about our brand. In terms of how to do it, this piece of governance, this study of histories of corporate governance is a very, very important part of how to navigate safely in emerging markets. Governance compromises don't tend to end well for investors in emerging markets. And the good thing is, there are listed in emerging markets some of the best companies in the world. So there's leading tech franchises, there's leading consumer franchises. You don't have to compromise. You don't need to buy politically exposed group that is highly suspected of political bribery, and there's lots of those around emerging markets, but you don't have to invest in those. There's lots of really, really well-run businesses where there is no compromise. So we always say to our clients that via the portfolio, yes, hopefully you're getting an emerging market tailwind, but you're also investing in some of the best run businesses in the world. So there's no compromise.
Mm-hmm. Is there a particular geography that you're leaning towards at the moment in emerging markets? Like, You mentioned parts of Asia were compelling, but Russia you don't invest in. What are you liking right now?
The technology theme, if you think about the huge boom you've had in US markets and the Mag 7 and sort of that sort of spilled out of the US now into the supply chain, and a lot of the supply chain to this AI infrastructure boom, is in Korea, Taiwan, places like this. So we've been sort of stepping back from those markets a bit because valuations there have become similar to what's happened in the US. There's a big boom, and I'm not predicting an imminent bubble crash or anything like that. It's just that valuations are very high. And elsewhere in emerging markets, there's lots of examples of pretty good valuations. And I think one that looks quite compelling today is the Brazilian market. Now, Brazil's got all of these governance problems that we've kind of touched on, and there's lots of businesses in Brazil I wouldn't advise people consider investing in. But there is a short list of businesses that have long track records of acting very fairly towards all the stakeholders. And those have valuations that look historically cheap. And part of the reason for that is interest rates in Brazil are really, really high. They're sort of 15%. And inflation's beginning to come down. So interest rates are likely to come down. So, if you get the economy pick up a tiny bit, interest rates coming down, that could be quite supportive for what's a very depressed market. We own the leading operator of pharmacies in Brazil, an extremely well-run, family-controlled business that still has a long runway to corporatize the pharmacy sector. We also own a very well-governed, family-run holding company that has a big stake in a leading private bank. And again, these are assets that should re-rate as the interest rates and things like that start to normalize. So I think Brazil looks interesting for a longer-term investor. Certainly, valuation is more on your side than it is with the tech exposed stuff today.
Finally, when you think about the next 3 to 5 years in emerging markets, where do you see the most compelling long-term opportunities emerging?
Yeah, there's lots of long-term sort of compounding opportunities. We own a leading mortgage bank in India, where really the penetration of mortgages in India it's very, very low. So the idea that a mortgage bank shouldn't be able to grow for a long time, it seems extremely likely that it will, and valuations are not particularly stretched. So that's one trend that you can get exposed to through a really well-run bank in India. I think I mentioned Coca-Cola bottling in Africa, but exposure to growing levels of consumption that are based on middle classes that are getting bigger, and that can be, of course, it's consuming soft drinks, but it could be better access to healthcare. We own a leading medical devices business in China, for example, that sells hospital equipment to all emerging markets. We own a manufacturer of medicines in India that has been growing for the long run and should continue growing for the long run as access to medicines improves across particularly India and Africa for that company. So there's lots of long-term compounding opportunities. And as I say, if you get the governance piece right and you're careful around valuation, I think it can be quite a rewarding place to invest.
Okay, brilliant. Thanks, Glen, for sitting down with Livewire today, and enjoy the rest of your time in Sydney.
Thank you.
If you enjoyed that interview, give it a like, and don't forget to subscribe to our YouTube channel. We release new content every week.